The best 15-week streak has just ended. So the bears have been dominating for 15 straight weeks, but that streak has just ended. And historically, right, when this happened, the S&P doesn't really just go up. Okay, it performed really well. So let me show you the data over here. So hey guys, this is Alex from MarketWise Asia. Okay, so a rare sentiment market shift has started. Okay, so the 15-week bear streak has broken. So for the past 15 weeks, more investors were actually bearish than bullish according to the AAII sentiment data. But that streak has just ended. So AAII means the American Association of Individual Investors. This is actually taken from the AAII website. So essentially, this is a survey where there are about 160,000 traders and investors, okay, inside here. Of course, not all will vote, but I believe a good representation, okay, will vote for their so-called the sentiment. And it has been doing this since 1987, basically asking them their thoughts, okay, where the market it is heading within the next 6 months or so. So we can see over here from the data over here, okay, for the past number 15 weeks, right, okay, the number of people who are bearish, okay, like 55.1%, it is more than the people who are bullish, 29, okay, 44 and 35. It is only actually for the past 2 weeks that they are, in fact, more bullishness, okay, more bullish. People started to be more bullish, 37, okay, against 36, okay. But of course, the most recent week, okay, when I'm doing this video, right, the 28th of May, the market is starting to have some pessimism again, where there are more people who are bearish, about 42% versus 33% there or so, okay. All right, so historical reality. So just to let you know that since 1990, this kind of reversal where the AAII bears outnumber the bulls, right, for more than 3 months, okay? 3 months means about 12 weeks, more than 12 weeks, okay? Then finally flips, right, okay, has happened only 8 times. So historical performance, okay, it has a 7 out of 8 win rate, success rate, okay? So the number of times the S&P were higher a year later. So this has happened 8 times, 7 times, okay, the S&P was higher a year later. So typically, okay, during these 12 months, okay, forward looking, all right, it has a median gain, average gain of about 22%. So, and guess what? The S&P, like I mentioned, right, a year later, higher in 7 out of these 8 times, okay? All right, and that is not really noise, that's a real signal. So in simple terms, right, when the sentiment it is deeply negative for a long stretch of time, and when it finally reverses, okay, the market tends to rally in the months that follow. Okay, so of course, the only exception, it is 2008, where it is the global financial crisis, and that is the only outlier. Okay, so this is the data just representing into a bar chart over there. So typically, after 6 months, 12 months, the return it is, you know, about 22%, okay, for the S&P 500 median return. So this is taken from the X.com, okay, formerly known as Twitter, under the Carson research, right? So he did data. So this is the S&P performance after more than 3 months of more bears than bulls, okay, all right, from 1990s, okay, until now. So you can see over there, these are the data over there, and these are the point where, you know, where the bulls, the bears finally flip into bullishness. So there's the green dot over there, the green dot, the green dot, the green dot. So typically after that, the market tends to go higher. So like I mentioned, right, forward looking after 6 months, 12 months, okay, the average median return is about 8% for 6 months, okay, and about 22% for 12 months. Okay. So what does this means for you? So you need to recognize the signal, understand that, okay, the 15-week bearish cycle, okay, ending is historically significant. And of course, you need to consider the context also, okay. This doesn't mean that you go all in tomorrow or the market, you just continue to go higher, okay. There will always be correction. The market doesn't move in a straight line. It goes up, come down, goes up, come down, there's a correction, okay? But it is a powerful piece of context. So which means that you need to prepare for the bullish phase. It tells us that the market may be shifting into a more bullish phase and you want to be ready. So it also tells us that, okay, don't just ignore the sentiment, okay? All right, they don't show often, but when they do, okay, you need to actually take a look at it, and they do really matters. So, stay informed. So if you like this information, okay, like this YouTube video, hit the subscribe button and share this to someone who need to see it, and follow us, okay, on YouTube. Learn more, think deeper, get smarter. So if this has helped you to see the market more clearly, like I said, drop a like, hit subscribe, and share this with someone who need it, okay, to see it, okay? Follow for more inside studies. With that, thanks, see you, and bye-bye.